Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. So we got really beat up all through last week, ended the week red. Are we totally just done from here or are we going to rally? We're going to talk about that in this video. You're not going to want to miss it because you might be surprised at the answer. Let's dive in.
Trade Genius.
So Bob, I don't know how many, 7 or 8 of the last days out of the last 9 or 10 days have been red. And this is, this market isn't really used to that persistent sell-off. So what are you looking at going into next week, wrapping up October, heading into November?
Yeah, so there's 3 things, Phil, and we'll show all these to you guys in a second, but I think the rally flag might be back on. I think the Fed may use the geopolitical environment as an excuse to be a little bit more dovish in their tone, number one. Number two is seasonality actually, from at least the quant's point of view, turns towards the positive because the flows going into January change. And then also we're starting to see some structure holding on volume profile, which we'll show you. And also maybe we can bring up the McClellan oscillator first, Phil, if you have it, to show that we're actually getting a bullish divergence. Now, this is like looks at highs and lows kind of a reading. And if you notice here, we have, this is the second higher low on the reading. And usually when you get these divergences like that, you can see where it happened in the past. You start getting some differential in the new highs versus new lows on the oscillator, you get a rally. So, institutional players are looking at that too, and it's going to give them courage of their convictions to try to rally up. The second area, Phil, is the chart that we showed the other day that you spoke to is the volume profile. If we can bring that one up next, is that, and this is really important, guys, volume profile. It's on TradingView. It's you have a certain level. It's basically free for you to use. I guess that was oxymoronic. It's free if you pay enough money. It's really important to have this tool because what the market likes to do, and you can correct me if I'm wrong, Phil, it's like an earth moving machine. It goes from peak to peak and it likes to fill in those volume valleys. And we just had a big move down on SPY. You can see that it's the biggest peak there is. If you notice that, and we did what Phil calls a peekaboo on it. As it pushes back higher again, and I'm going to throw that back to you, Phil, there's a level here that is probably going to try to reach here before I think we'll have another failure and make another lower high. So I'm going to throw it back to you.
Right. So like last time, we came down into one of those peaks over here and then we rallied back up and that ended up hitting this other peak from below, right? And then rejecting back down. So you have a similar situation here because we're running into this massive volume node. We said, hey, look, this market's really not going to just blow through that because it's been so much volume. And that's primarily because of all the action here. So this is a major area of resistance that we had broken out of. Basically what the market did was round trip what we got from the Yellen debt ceiling raise pump, right? Pumping all those T-bills into the system. That turned around and became collateral for this move. So we've round tripped that whole thing. And so part of the reason for that structurally is because a lot of debt issuance on the long end of the spectrum was issued all through here. And that's what this market's really sensitive to. So basically it comes down to all things being equal and there isn't systemic problems. If you're going to get a bunch of T-bill issuance and only T-bill issuance, then you can expect this market to go up quite a bit. Well, that's done now, and it's going to be done for a while. So we're going to be more in this mode like we were all, first half of 2021 or 2022, excuse me. So that being said, we have to look at these levels and ping-ponging down these levels. So like you mentioned, we had run into the one prior and then we bounced. That's a very similar situation. So don't be surprised, and we're going to show you some other things too of why in the next few days we might see a rally. It might be a sharp rally too, but we look at this previous area, this previous node. So we may see something like this up into it, choppy chop, and then we start working our way back down. But this will be this area up here, about 42.75-ish or so on the ES futures or 42.50 on the index itself, will be an area that we would look for a bounce to go up to. So it doesn't really change the macro. We feel like we're in bear mode now, but you are going to get these series of lower highs. And you can see that when we're in this mode, this market does these sharp rallies back and forth, right? And you get these lower highs. And while you're doing this, it really seems like, hey, this is over. But in reality, you're just creating these structures of lower highs and lower lows. until it's done. And then usually when you get down to these levels, there's other readings that come into play and other structural things that come into play, such as large long-term moving averages and things like that, where you have a shot at putting in a low. And that was the case down here when we ran into the 200 weekly moving average, which, by the way, is right under us down here. So, and a lot of people are eyeballing these big levels, and that's where sometimes you don't quite finish the move off and you get a counter rally first, right? Blows everybody out, and then that move comes. And so that ES does that, S&P 500 does that stuff all the time, even on smaller time frames, on smaller levels, but it comes up, back up, and then rolls over and finally gets it later. And all the guys that were trying to catch that move get blown out, but in the end of the day, when it's all said and done, they were correct about where it was headed. So you have to be cognizant of the games that are played and some of these oversold rallies that will happen before you get to the larger target, which we believe would be closer to 4,000 SPX. So yeah, I think this is a good technical setup for a rally. And then to add to that point, Bob, and I'll kick it back over to you for your charts, is the stats on what happens at this time of the year when we come into what they call the 4-day turn. So basically it's the last 2 days of October and the first 2 days of November. And what's interesting about this statistic is that when the trailing week, meaning the week we just ended, is negative, then we're on a tear. Like since 1978, we've not had a red week. The prevailing move has been quite positive. So that means for the next 4 days, statistically, we are due for a pretty decent bounce. So I wanted to share that with you guys because I thought it would be nice to know this little stat. It is a very niche stat. It's not about, generally a month or whatever, seasonality. This is like, if this happens, then this happens over the next 4 days. So it's very niche. Hey guys, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. A very concise stat. And I think given what we've saw going into Friday, given that we're running into that high volume node and the way that this market is acting right now, I think this is an awesome setup and you have really good odds for up into the first part of next week at the very least.
Yeah, I totally agree, Philip. We have 48 hours here of the weekend. If there's not an expansion of the war, I think people will probably take a little bit off of oil and a little bit off of the worry on the volatility, and that might be the springboard. And with the Fed on Wednesday probably not trying to even throw more cold water on things, it could be a chance for a good rally next week. I want to show some charts on gold and silver miners and just how excited I am about what I think is about to occur in that sector. Okay, guys, I'm going to cycle through. This is not an exhaustive list of gold and silver miners. I think you're going to see the point here, though. I'm going to start off here with AEM. If you notice what's happening here, the sell-offs are getting truncated. We're about ready, and this is a daily chart. And what I look for now is that I'm looking for the on the bottom there, you see the caterpillar, and then you see it went back to red line. When that thing flips back to blue, and we get a change in the vol stop, which is right here, is that this is a good entry for you and your stops right here. So it'll be fairly tight stops for a chance for some really big moves. AG, this is long suffering. AG is already starting this transition here. Again, it's holding support on the vol stop. And again, I think this one's already ready to go, Phil. Here's ASM. It's already in bull mode. Look how that beautiful hold there of the range. And I think ASM is ready to rock and roll. You probably can enter it already. I own CDE. This is a beautiful rounded bottom here. Again, look at that. It went down and touched the vol stop. And it's ready to break out of that. I wouldn't really call that a flag. Maybe on a higher time frame, you can maybe call that. But that's good consolidation. It stayed on the upper half of the previous range there on that move. And again, this thing's ready to rock and roll. I threw the dollar in it just to see. The dollar has had trouble breaking up here. If the Fed is dovish at all, we could see a little bit of a push down in dollar. I think that's also going to help gold and silver miners. Here's Ego. Ego broke out. That was a beautiful move. And that move started right there. That sniper buy is an indicator you can get with Trade Genius. And it broke the vol stop. It went blue, which means momentum was our way. Caterpillar said buy. And that was a beautiful 15% move there. And anybody that's a client of ours that has a annual membership, Phil, or is renewing into 2024 gets this indicator on the bottom for free. So take advantage of it, guys. And you get the template. Freeport, I threw this one in there because it's copper and gold. It's still struggling here a little bit, but the pure gold players are definitely doing much, much better. Franco-Nevada, this is one of the streaming companies that actually finances the mines. Again, nice chart. Fortuna, again, wait for it to break that vol stop. It's making a higher low, it needs a higher high, and then it's going to move up much higher. In my view, these are 10, 15, 20% moves coming. Gato, long suffering, it's holding, transitioning, and I think this thing's going to make a move towards $6. Barrick Gold, I own Barrick Gold. Look at that beautiful hammer on the at the vol stop. I'd like to see that thing move up higher again, but again, I like this one. I own this one like I own CDE. I think it's going to do really, really well. Hecla, I own Hecla. Look at that. Held again, transitioning. I think this is going to move up much higher as well. This thing has a potential 25% move in it. Mux, I never traded Mux. I just threw it in there. A little bit deeper correction. It needs to prove itself before you can jump in on it. Newmont, this came up. We talked about this in a room the other day, not our podcast. That's a nice breakout on Newmont Mining. This is a large cap. Pan American Silver, nice setup, holding up very well. It's transitioning, and I'm looking for that Caterpillar to come back in again. And I'm looking for it then to assault the $16.50, $17 area again. Sandstorm's another streamer. Okay, this one's has platinum in it. It's been breaking down. If you notice, anything that has to do with economic activity is not doing as well as the precious metals. So just bear that in mind, that this one is still making lower lows and lower highs. Silvercrest looks good. Looks like it's ready to break out again. SLV, the chart looks beautiful. Here you got Silvercorp. Silvercorp's holding again. And you got, these are easy stops underneath. Take the prior low, and you have fairly tight stops if we're wrong on this move. USAS is still struggling. Wheaton Precious Metals, I own Wheaton Precious Metals as well. And this is also a streaming company, royalty company, I should say, not streaming. Holding up really well here. The nice thing about these royalty companies, Phil, is that if the Fed pauses or shows any kind of inclination to cut, and you have them allowing liquidity coming in, Wheaton, Sandstorm, Franco-Nevada, they're all going to skyrocket because their cost of borrowing goes down and they're getting higher prices for the metal. I think that's it. So I want to throw it back to you, Phil. I want to show people these charts. I think there's some tremendous opportunity here. All we're doing is we're looking at our trades force indicator, our vol stop, our Kona and Sniper, and looking at the channel. And so I also have another thing on there called the Ranger, but I took it off so it would be a cleaner chart for you guys to look at. So we have some really good tools to show you where support resistance is and also when you should be able to make the moves. But I think it's time for gold and silver. And I think we're going to know really fast whether I'm right about this or not. The Fed meeting coming up next week.
All right, sounds good. Well, let us know what you guys think about Bob's ideas. As always, we love it if you hit like and subscribe and smash that notification bell and set it to all. And as Bob mentioned, head over to tradegenius.co and check out our specials. We've got many different specials. You can get in the room with us. You can get the newsletter. You can get indicator packages. It's all there. If you have any questions, just hit us up, shoot us an email, and we'll be happy to talk you through it. Thanks, guys. We'll see you on the next episode. Take care.
Trade Genius.